Thank you for joining us. My name is Zach Brandow. I'm the president of Core Assurance Partners, and we're happy to have you join us today. We've got a few housekeeping items I just want to go through quickly for everyone's information. We're recording this session so it can be viewed later, and we will be sure to share the link with all those that registered prior. We're going to have everyone in what's called a listen-only mode, and in that way we can save Q&A for the final part of the presentation. But if you would like to submit a question or have any issues, you can use the three buttons found on the bottom right of the presentation, and Elizabeth's keeping track of that. As well, during the Q&A session, if you'd like to use the raise your hand feature, during that time, we'll be able to submit questions as well. We're going to go over a few different topics today. There we go. And we've got a partner with us from Concierge Cyber, Kurt Sues, and he's gonna play a part in discussing his product that he provides to our partners. But we're going to first start with what's a cyber claim? How do you define it? What does it mean? I know there's a lot of confusion around that. How it impacts you both from a first and a third party perspective, meaning your business and those outside of your business. What are some of the common threats? What's the market look like today? How is it changing? What's required to obtain coverage, et cetera? And then possible solutions. So with that, I see Kurt has joined us. Kurt Sues is the CEO and founder of Concierge Cyber. Curtis, you take it away. You're muted.
There we go. Can you hear me now?
We can. Thank you.
Good morning, Zach. Thank you, everyone. And it's great to have everyone here. We appreciate it. I want to be interactive. So today we'd just like to talk about what we're seeing in the marketplace from a threat landscape, from an insurance and risk management perspective. So Dee, if you want to flip the next screen. So we can talk about what cyber claims are. I've been doing cyber insurance and risk management for 25 years. But before that, I served as a financial fraud investigator with FDIC. And I've seen a lot of various variations of financial fraud and how it impacts businesses. So that's what we'd like to talk about. Dee, the next slide. So really think of it as your out-of-pocket costs, the first-party costs, right? So that's costs that directly impact you. And then we have liability. So the financial loss of a partner and that loss attributed to you and them suing you. So we're going to talk about first-party losses first. And with that, so the first aspect is in terms of bricking. So that's where your computers are more or less a paperweight. Some type of a cyber attack impacted the ability to use those computers, and you don't have the ability to turn them on, to utilize them, and it's more like a brick, right? And so, what kind of losses? Obviously, you've got business interruption losses, so loss of income related to your operations and associated costs. Again, oftentimes when you look at insurance, you may look at your property policies, maybe having coverage, but property policies are triggered by physical direct damage. So if your computer equipment or your servers are not physically damaged, it probably won't trigger your property policy. Ransomware attacks, so we're seeing that in the news. Companies getting hit all the time, whether it's state-sponsored actors or those associated with criminal groups. But ransomware attacks, it's a variation. But years ago, we used to see attacks of if we hold your data hostage, or if we wipe your data, if you don't pay the demand, that will be the result. Today, though, what we're seeing with ransomware is a variation of the bad actors getting into your network and copying data, exfiltrating it, and then encrypting your data. And then the next thing you'll see is a Bitcoin demand and maybe a link to the dark web, but basically the message stating that we've exfiltrated and copied certain records, and if you don't pay us, we're going to release those records. So you could have a variation of the network not working and operating like a bricking event, but also associated with that is if you don't pay, we're going to release the data. One of the largest ransomware attacks going on as we talk today is happening in Australia with one of the largest healthcare providers. It's really, really bad. The organization decided not to pay the ransom. They're going to try to restore by backup and other means. However, the threat actors, and they believe they're Russian state-sponsored actors, Revel, which is kind of a lot of these threat groups go away and come up as another type of entity. But anyways, the threat actors are now proposing to make public HIV records, other medical records, things that psychiatric records, things that would be obviously confidential, and then the the health care organization is going to have to figure out how to deal with all that. Business email compromise, so that's equally as bad. So this is a situation where an organization gets an email asking the organization to redirect payment of monies. And so there are variations. So for example, we've seen phishing attacks where they'll simply change a letter or something within the email and trying to redirect payment. But what we're seeing today as well is actually hacking into the Microsoft Office 365 server in the cloud, going in through Microsoft and actually getting into your email and looking at the accounts receivable ledger, perhaps looking at the top 5 receivables, and then sending emails to those organizations with the actual invoice amount and everything, asking the your client to repay the funds and redirect those funds to a different bank. So it's actually coming from your organization, from your actual email to your business partners. And we're seeing a substantial spike in business email compromise. And so what we typically see is if it is going overseas, you really have a 36-hour window in working with your bank. The FBI has certain resources. They call it the Recovery Asset Team, or the RAT team. And so if you are able to hop on this fairly quickly within 36 hours, the FBI has an 80% chance of recovery. Honestly, though, if these attacks happen on a Friday, the attackers know that and will have a two-day runtime, especially if it's a holiday weekend. So again, it's something we see equally as bad. Typically, it's 6 to 7 figures being wired. So third-party losses are, again, losses that are that occur with a third party, and then you are financially held perhaps liable. So with third-party losses, again, if there's a data breach of data you own, and so you may say, well, we have our data with a third party, they're responsible. Actually, with those cloud providers, whether you use QuickBooks in the cloud or Dropbox in the cloud or Amazon Web Services in the cloud, those companies all push the liability back to you, and they actually say if there's a data breach, you'll indemnify us and hold us harmless. So it all inures to the benefit of that large cloud provider. And so whoever is your customer, you are responsible for the protection of that data. And so you could potentially be held liable in the event that that information was broadcasted. Any act, error, or omission that caused a loss. So again, things happen, system glitches happen, errors happen. And so whether it's the firewall, whether it's multi-factor authentication, which is shut off by someone accidentally, if it causes a third-party financial loss, you could be held liable. And lastly, acting in a fiduciary manner. We've all heard about director and officer litigation in the public space, publicly traded company space. However, as a private company, how does that impact you? Well, for me, as I mentioned, I was a regulator with FDIC. I was the first team closing a financial institution because of insolvency. The first place I would go to is the board of director minutes to see what the directors were doing in a fiduciary manner, and the officers. So think of the plaintiff's bar in litigation, in discovery. First thing I would probably ask for is, let me see your board minutes. Let me see your committee minutes for security and information security practices. And if you're not talking and recording about best practices, risk management, now, should you buy cyber insurance? You should look at it, absolutely. And organizations, we encourage them to purchase cyber insurance, but for whatever reason, whether you can't afford it, whether it's not covered and excluded, or whether you decide to self-insure it, whatever the reason is, you should be denoting that in your annual board minutes or some committee minutes, because from a fiduciary manner, we want to make sure you're doing what a reasonable person would do, right? Things happen. Banks get robbed every day. However, in the case of cyber, you want to be able to evidence, whether it's to a regulator or whether it's in litigation, that you've got risk management practices in place, you've evaluated this, and again, you're doing what a reasonable person would do. Next slide, D. So let's talk about some coverage options. You certainly have standalone cyber, and then we have other things called silent cyber, where you may have an element of cyber insurance through your property, your general liability, your professional liability. Every policy, even your homeowner's policy, has a potential element of recovery. That's where you have to work with your broker or agent to actually look at all these policies, because the standalone cyber insurance policy is the first place you would go to. However, there are potential other sources of recovery, and again, every market, every insurance company has different language, so it really is a case-by-case basis. So coverage options, again, we're going to go to the first party, just like the liability, and then the third party liability. So from a first party perspective, think of digital asset protection. That's the loss of your electronic records, your digital records. And so again, it could be triggered by a variety of activities. So for example, if you have a denial of service attack where someone actually is inundating your network with requests or whatever it is and takes you offline. And those records, it's almost, it goes hand in hand with the business interruption, which is the second bullet. But if it impacts actually the loss of your electronic records or deletion, the cyber insurance will provide for the cost to restore and recreate your electronic records, right? There's typically a deductible or retention that you're subject to, and then they will restore and recreate those records. And generally, they'll look at backups and other means. We like to say in the information security world, a 3-2-1, right? So you want to have 3 sources of backups, and you want to have 2 sources of media. And that could be in the cloud, it could be removable storage, and then you want to have 1 backup physically away from your operations. So it's the 3-2-1, right? So that way you have the ability. Now, I have to say, you want to make sure that you test your backups periodically and try to restore them, because I've seen situations where the malware was bled into the backups, and when the organization tried to restore from those backups, they were also compromised and unable to be restored. So if you have cyber insurance, they're going to look at trying to restore that from backups. If you don't have backups, then the cost to restore, recreate from scratch. The business interruption, again, generally is calculated by net income before tax and is subject to the retention as well as a waiting period. That waiting period could be anywhere from 8 to 12 hours, which doesn't sound very long, but it's forever when your network is down. So that is how the cyber policies respond. And then you also have dependent business interruption. That's where you rely upon a business partner. For example, it could be you rely on AWS and their servers, or you rely on QuickBooks. And what happens if QuickBooks has a business interruption at the month end and you can't invoice? Or even if you're a manufacturer and you manufacture cars, and let's say that Michelin tires is attacked and the auto manufacturer can't get their supply. So you are dependent upon the business operations of a third party. That could be covered under a cyber policy the same way by an hourly waiting period subject to a retention, all based on net income before tax. Extortion, that could be a means of many policies. It's just the cyber or digital extortion, but there are markets that will offer extortion in any format. For example, I'd seen a hospital who got called from the fire department. There was a piece of vacant land where there were X-ray sleeves that were thrown across the field, and those X-rays. Some of the boxes were almost tried to be burned by someone, but the fire department was able to extinguish. But the fire department was going through and saw these X-ray sleeves with patient name, date of birth, and associated with this hospital. And so it was a third-party service provider that had custody of these records. It was a rogue employee that tried to extort the hospital for those records. The hospital didn't pay, and the records ended up on this piece of vacant land and just tossed. So you could be looking at extortion, not just cyber, where a lot of the demand you're seeing is in Bitcoin, but also traditional extortion means for your data. And then social engineering, that goes hand in hand with business email compromise. The same situation where if someone is trying to socially engineer or fool your organization to do something, whether it's sending money to the bad actor and redirecting those funds, or for whatever reason, if there's again a loss on your part because of the loss of money, you could seek recoveries from a cyber policy. Generally speaking, those are done by endorsement, but again, we're seeing business email compromise equally as bad as ransomware today. Then on the liability side, you've got again, financial loss caused by a third party, and you receive a demand. And so with the policies, these cyber policies have a duty to defend. And so whether it's a network security wrongful act or a privacy wrongful act. So for example, if your organization sends malware, maybe it hits every Outlook contact for an employee at your organization, and that malware is distributed to your partners and somehow compromises their network, and that organization sues your organization because they see it originated from from your organization. So again, that is a network security wrongful act, and certainly a privacy wrongful act. So if you have personally identifiable information or things about employees or confidential corporate information of your customers, and that is compromised, it doesn't have to be necessarily broadcasted in the dark web, but if there's any allegation that it was stolen and compromised and you get sued, the policy has a duty to defend and will investigate. And forensically, you'll get breach expenses. That's the last bullet. The data breach expenses will provide coverage for a cybersecurity company to work and look forensically at what happened. Generally, that's done through a third-party law firm, which we call the data breach law firm. The uniqueness about cyber insurance, and I can't stress enough, is the security company is engaged by the law firm on your behalf to maintain attorney-client privilege, right? So while you may have a relationship maybe with a third-party security company, the carriers are going to have a panel of companies that you're going to have to work with, right? And you're going to have to get sometimes their approval before you can engage those parties. So that's where you have to work very closely with your broker and see what the provisions are. The data breach expenses will also include crisis management expenses, call center, if you have to establish a script and have a call center manned to take incoming calls of what to do, and identity credit monitoring expenses. Media liability, that's one that is often just by some underwriters just throw in, but is a really important coverage. So what media liability is: copyright, trademark, libel, slander. So for example, on your website, you have content and pictures. If you are using pictures that you don't have authorized use for and are sued for unauthorized use for copyright infringement, your cyber policy would be triggered. But a lot of these policies extend media liability to also pamphlets and brochures in your advertising. So in the event that you infringe on a third party for copyright trademark, your policy has a duty to defend. Also, as part of that coverage is libel slander. So in the event an employee using a computer of the insured organization, if they were to send an email out from your corporate-owned computers and slander or libel or slander a third party, and you get sued for that, there would be coverage for that, right? So again, we've seen a lot of litigation in that as well, but again, it's a very valuable insuring agreement. Regulatory fines and penalties. So this is actually the cyber policies will pay for regulatory fines and penalties where they're insurable. And so, for example, if you are taking credit cards and every year you do a self attestation that you're meeting the payment card industry or PCI security and privacy requirements, and if for some reason there happens to be a theft of credit cards or something from a security perspective, and a state agency goes after you, or a federal agency, more likely if it's a healthcare violation with HIPAA, or it could be certainly in banking, bank regulators coming after financial institutions and impose a fine. Where insurable, the cyber policy will pay for the regulatory fines and penalties. And as I mentioned, kind of hand in hand is the payment card industry or PCI fines. So if one of the brands, whether MasterCard, Visa, Amex, has some type of a loss, and go after you because, again, you're not payment card industry compliant, then again, you may seek coverage under a cyber policy. So again, just as a recap, think of it like a property policy where you have first party coverage, and think of it liability policy. And again, the importance is of, there's a lot of litigation. Cyber's been around 25 years, but certainly property policies are going to be triggered by direct physical damage. And most often you don't have a direct physical damage with a cyber attack. Your laptops, your hardware, your servers are physically not damaged, so oftentimes won't trigger that for property nor business interruption. And then your liability, generally speaking, a lot of other type of liability policies, whether it's professional liability or error and omissions, a lot of markets are starting to exclude cyber because they want the organizations to buy a standalone cyber product and not have it included in their E&O. That said, you really have to look at every policy you have, and that's where you work hand in hand with your agency, with your agent, to make sure that there aren't any other sources of recovery, and perhaps you notify every line of coverage that you have, just to make sure that that you don't have any late reporting issues or anything like that. But with that, I'm going to pass to the next screen and talk about the common threats and mitigations. So we're going to talk and focus today on ransomware and, again, business email compromise, because that's what we're seeing. Dee, if you want to go to the next slide. And so ransomware, right? It's rampant. 66% of organizations were hit by ransomware. Again, an increase, 78% increase, according to the state of ransomware. It's a report published every year by Sophos. They look at ransomware, what type of industries are impacted. And in this report in 2022, 65% of the attacks involved data being encrypted, right? So you used to have situations where data was wiped away, data was just for whatever reason exfiltrated or what, but actually, as I mentioned earlier, they're going in, they're either copying the data, exfiltrating it, then they're encrypting it in step 2, and then step 3 is then they are conducting extortion and threatening to have it to publish the data in the dark web. Next screen. So what's the data recovery after the attack? So The good news is 99% of organizations got their data back. The bad guys know that if you pay the Bitcoin demand and the decryption key doesn't work, then fewer organizations would pay the ransomware because of the uncertainty of it actually working. So, there is kind of a asserted effort to make the decryption keys work so that it's motivating for the organizations impacted to pay. However, I'll also say just because you've been hit once doesn't mean you won't get hit 2, 3 times over. And the importance of the process of working, if you have cyber insurance, working with, again, the data breach law firm to bring in the security firm that will then use an anonymized wallet. If you pay the Bitcoin, it's got to be done anonymously. But number two, the Department of U.S. Treasury is requiring organizations to evaluate who you are talking to. So the information security companies will actually reach out to the threat actor and initiate a discussion to evaluate whether the organization or the individuals that are demanding the ransom is not on a U.S. Treasury Overseas Foreign Asset Control or OFAC list. Basically, you can't pay entities or people that are blacklisted by the U.S. government. You could open up your organization to civil money penalty fines. So it's important. And you may ask, well, how does the information security team, how do they ascertain that? They have means to do that. And so anyway, so what happens is once they initiate contact, they will run that through the U.S. Treasury's blacklist. And if it's not a blacklisted person, entity, state-sponsored actor, then they will negotiate. And typically over a period of days, they may negotiate a $250,000 demand in Bitcoin down to, say, 40,000. So anyway, so ransoms do get paid. They do get data back. And again, sometimes though you pay and you may not get all of your your digital assets restored. Next screen. And so again, ransom payments based on 965 payments that Sophos saw, 3 times the increase in the proportion that paid of $1 million or more. Again, ransoms used to be just 2, 3, 5,000. Now we're seeing small companies hit by easily $200,000 Bitcoin demands. Manufacturing, utilities, healthcare, it really doesn't matter what your industry class is, where your geography or how big your organization is. Next screen. And so really, again, it impacts your organization. We had a manufacturing organization that had operations in England. England first went down with a business interruption because of the extortion and then when the U.S. headquarters opened, that's when the information security people and the IT people saw the extortion demand to get the manufacturing platform back up and running. And it took that organization about a week to get back up and running. The average cost, as the next screen points out, again, it really looks at what's the cost per record. There are industry calculations, about $180, the cost per a data compromised customer record. And when you look at intellectual property and other things that you have, an intellectual property, by the way, is not covered by a cyber policy. So again, you want to look at, what is it going to cost per record? And the more records you have, the more costly that cyber attack is going to be. Next screen. So again, what do we recommend? Again, 3, 2, 1, right? So have 3 forms of backup, have 2 different sources of media, whether it's cloud, whether it's hardware that's again can be separated from the network, and have 1 backup off-site. You really want to be able to retain your backups to rebuild your system in the event that it's the worst case scenario. You really want to make sure that incident response plan that you have, and certainly you really want to have an incident response plan. If you don't know where to start, that's something where Core and Concierge Cyber can help. But again, you want to have a plan. You want to test that plan, and you don't want to wait until you have an attack. The next slide. And again, talking to business email compromise, this is an annual FBI report, but business email compromise is at the top of the list in terms of the type of crime. And then the next slide will show, again, the different threat vectors, whether it's spoofed emails, again, whether an I is changed to a number 1 or an O is changed to a 0 in an email, getting through your firewall. If it's a phishing attack, again, getting back to the spoofed emails, the vendor email compromise, like I mentioned earlier, where actually if they're attacked and somehow a request is done by a vendor, or if your Office 365 is attacked and an actual email goes to your business partner and redirects payment, it could be a very ugly situation. Credential harvesting, again, looking at the dark web of passwords, usernames. If there's been a lot of times if you use the same password in multiple applications, could the threat actor get into another application? And then, like I mentioned earlier, the cloud-based attacks in Microsoft 365 to redirect payment information. D, next slide. Again, so recommended mitigation steps for business email compromise. Really, again, just make sure, especially if you have security awareness training, look at phishing. There are a lot of good solutions out there for testing your employees, regardless of the size of your company. Really be red flag and wary of any last minute wire instructions, and verify all payment changes. Call your business partner. Ask them, hey, did you send this email, and are you requesting this to be sent to another bank? Again, I can't stress enough, even calling your bank or having your bank do a callback verification, right? So looking at email addresses and ensuring that you're having the right credentials and things of that nature. So again, there's a lot of different variations for business email compromise, but these are some of the best basic prudent measures you can put in place. Next slide. And I'll pass that to Dee about the market update.
Thank you, Kurt. Good morning, everybody. As Kurt said, my name is Dee Carpenter, and I do serve as the Director of Business Development and Marketing for CORE. And what I really want to talk about today is, now that Kurt has talked about all of these threats and things that we're facing in cyber insurance and coverage, what has happened to the cyber insurance market? And we're going to start today by talking about some of these market drivers, those that have cyber insurance or maybe have applied for cyber insurance in the past. You probably have been through a process where you've had multiple questions asked. They've gotten pretty nitty-gritty into detail of what you do for your response plans. And part of the reason that's happening is we've got some drivers and some things that have changed in the cyber landscape. And, just some of these items of damages that are totaling $6 trillion in 2021, increases in that average ransomware payment. I know a lot of people say, oh, well, I'm a small company, or I'm not really, I don't have a big online presence. Kind of the idea that you have to be a larger company or have a large online presence to be a target of an attack has really changed. All industries are starting to be affected. A lot of more what we consider a low risk industry, like the professional services, attorneys, CPAs, they're being targeted because those bad actors, they are aware that there is lots of personal information that are kept, usually online, by each of these low risk professional services companies. And then, as Kurt had shared, we're seeing an increased cost per compromised record. If you think about how many individual client records we all maintain electronically and multiply that by $180 per record, you could see how that could be very costly. And so as this landscape has changed and as these damages and claim payouts and who's actually being targeted have started to drive the market, we've obviously had some market response to that. And what happens is that the insurance companies, obviously, in an attempt to mitigate some of these increases in their payouts, we're seeing 100 to 200% increases in our cyber rates. We are seeing mandatory requirements like multi-factor authentication, endpoint detection, encryption, response plans. Carriers will not provide a quote for coverage until they see that these things are in place. Coupled with that, increased hardware requirements, like Kurt had said, the last thing we want is for our laptop to be a paperweight. So there are some hardware requirements that are being implemented. Really the operational controls, that response plan and the vulnerability testing is huge right now with the market. They really want to see it kind of changed the thought process from if an event's going to happen to when an event happens, what are you going to do as a company to protect or restore your data as well as your client's data? And then really there is limited to no tolerance for risk with subpar controls. We really, as agents, we work really hard to tell the best story and really shine our clients as, you know, the most well prepared and ready to go. And if those things are not in place, obviously it becomes very difficult for us to do that, and the carriers just don't have any tolerance for it at this point. Additionally, we're starting to see lower limits being offered. What we used to see, and you know, you could get $1 million for a very pretty inexpensive cost. We're starting to see lower limits being offered, or if you do require a higher limit of coverage, that there's definitely additional underwriting involved. We're seeing higher deductibles. Carriers want to see that you as a client of theirs have got more skin in the game. They are starting to make exclusions, like one that Kurt really talked about was the intellectual property. The claims arising from state-sponsored actors. As he had also mentioned, you know, if they are on the Treasury's do not pay list, you know, they're going to not even make it an option that there would be a claim payout to them, because we can't, but also any of those state-sponsored actors that maybe if they're not even on the list, but they're kind of a known threat, that they could be excluded from coverage. Starting to exclude some industry classes that they're starting to see that they're having multiple claims come through on those particular industries. And then gross written premium caps. So they're just really putting in some, you know, pretty stringent terms, conditions, obviously affecting the pricing and what you as a client would see in the purchase of cyber insurance. But I know that Kurt's talked a little doom and gloom with what could happen. I'm saying that the market's not responding, you know, positively to these claims, but there are solutions. And that's really kind of what we're here today to talk about the most, is to make you aware of what's out there, what's affecting things in the current market, but also to provide you some solutions. And, you know, the very first solution is obviously to apply for and maintain a cyber insurance policy. And more today than I think that it has been in the past, that it is really important that you are partnered with an agency, an agent that really understand the current market, the current threat landscape, that they are working hard and have a deep understanding of the risk. of the coverages available, whether it's a standalone cyber product or a inclusion of some cyber coverage within a package policy. Our agency partnerships bring the capability to bring your coverage submission to multiple markets. That gives us some pricing control, some deductible options. Really, this third one, expertise in facilitating the mitigation of risk and implementation of security controls. I think all of us here that are in insurance will tell you that we're not tech people. However, we have worked very hard and gotten very educated on just the basics of what's needed and how to help our clients actually become more involved in their implementation plan. What do they have to prevent a cyber event? What do we have to mitigate that event to potentially make it not as detrimental as it could potentially be? So that really brings us to the fourth one, which is really staying abreast of new threats, new markets, available options. There's a lot of coming and going in the cyber market right now with different companies and products and availability. So, really just that partnership with the right agency to bring and facilitate that process it's super key. And then obviously with cyber insurance policies, there's tons of loss control services being offered, from employee trainings to response planning. All of that is available. And it's not the only solution. I'm going to pass it back off to Kurt because we have partnered, obviously, with Concierge Cyber to offer a second solution. So, Kurt, if you wanted to jump back in and discuss this.
Yeah, we want organizations to purchase cyber insurance, right? However, I've been underwriting cyber for 25 years, and if I saw 8 out of 10 small companies walk away because they're not insurable, because they don't have security standards, or the pricing was unexpectedly more than they thought for whatever reason, right? I wanted to provide a solution instead of walking away with nothing. And so I looked at roadside assistance as the model. And so think of us as a subscription, that is an annual subscription. Concierge Cyber, we don't have an insurance component. We are like roadside assistance, right? So as a member, you get access to 2 hours with an on-call chief security officer, pay-as-you-go discounted rates thereafter. Again, we see a lot of organizations don't have a dedicated security professional, right? And so we encourage organizations, to utilize as the membership, and just like you would with the cyber insurance insured, having access to the pre-loss resources. I've created, and our team has created a incident response panel. So we've got 20 law firms, we've got 16 security firms, we've got all 3 credit bureaus, we've got crisis management and identity credit monitoring. The thing that's important is you want to ensure you have the bandwidth, right? And so we've seen some cyber markets with 1 or 4 law firms. Is that going to be enough broadband in the event there's a massive cyber attack? So again, we want to ensure that our clients have access, particularly if it's not covered. Even if you do have cyber, what's interesting is 55% of our members do have cyber insurance. But for whatever reason, whether they have large deductibles, they're concerned about things that may not be covered, like intellectual property, or for whatever reason, it's just like you have auto insurance, but you still value that roadside assistance membership because not everything being covered. We also provide, 12 information security policy templates with a member. So again, if you don't know where to start, utilize the free 2-hour call. We've got information security third-party providers that can help you, and then again, it's pay-as-you-go discounted thereafter. And then that 12 security policies template is anything from email usage to antivirus to physical security, right? Even wire transfer and treasury type of things that you should contemplate. Disaster recovery. Again, do you have an incident response plan? Do you have a ransomware policy? What are you going to do pre, during, and post? During the time of the ransomware attack is not the time to kind of figure out what you're going to do. And we see a lot of organizations, it's the first time, it's a horrible time to go through. And if you don't have a plan in place, again, we want to get you, so to speak, on the road. You never get to your destination with cyber because the threat landscape is ever changing. The regulatory litigation landscape is ever changing. So even from the cyber insurer perspective, I don't think you'll ever be able to actuarial look at this, because what happened 3 years ago isn't going to happen 3 years from now. And also the use of technology changes, right? So, 10, 15 years ago, people didn't have mobile devices like they do today, or bring your own devices, right? People are working remotely from home. And how does that impact coverage? There's just a lot of questions. And one thing we haven't talked about, but Internet of Things, right? So if you have internet connected devices like televisions, refrigerators. I bought my first coffee maker, which is internet connected. I would never have thought about that. Garage door openers, security. I mean, even look at thinking about if you're a property manager and you're providing services to a bunch of tenants in a skyscraper, and if you're able to compromise the thermostat and in the winter shut off the heat, that could be a horrible claim. So again, you have to think of cyber maybe for some of the things that are unthinkable. Again, if you're a smaller organization, you've got to look at your contracts. That's where you want to work with core. It's not just about firewalls and antivirus and even multi-factor authentication, because those things can still be compromised. You got to look at your contracts with your third-party vendors. You got to look at physical security, even and looking inward at your employees, because you're still seeing disgruntled employees. So there's a lot of things. So Concierge Cyber, in a nutshell, it's a membership, an annual membership. We are in partner with Core Assurance to provide that, just like roadside assistance. We help companies get on the road. And again, in this ever-changing environment, we want to ensure that you have cyber incident response. But that said, we also have and offer pre-loss services, whether it's how do I invoke multi-factor authentication, if that's a requirement for insurance, how do I become insurable? We can help you as a Concierge Cyber member with all of that.
Well, thank you everyone for your time. Thanks for attending. Hope you found this was useful. We'll be sure to send you a link with the webinar shortly. Thanks again.
Thank you.